In trouble. Okay, here I am, guys. I hope you got me here. Having some technical difficulties tonight. Apologize for that. I've been trying to get this thing going for a couple of minutes, but anyway, can you believe 50% of the country is not in the stock market? I couldn't believe that. I read that this week. I'm like, hey, we need to have more participation. We need to have more people that are willing to put their money in American business and to capture those profits, capture those appreciations, and grow their portfolio, create some financial independence. Because only 1% of the country will be financially independent at 65. So sad. I hope that we can all learn together. This is for entertainment purposes only. It's your prerogative to do whatever you want to do. So what I'm going to do tonight is I'm going to go through my itinerary. I'm going to show you what I'm holding. I'm going to show you the history, some things I have had, and I've sold it, made some money, lost some money. I'm going to show you how to screen for stocks, especially stocks that are oversold, RSI less than 30. I'm going to walk you through that. I'm going to show you a chart on stockcharts.com. If you want to go ahead and go to that, and we're going to be looking at finviz.com too. And you can walk with, watch this video, back, go back and watch it. You can go do it that way. But I'm going to show you my trading platform, talk a little bit about day trading, a little bit about swing trading. No holy grail. Okay. Do you know what that means? That means that nothing works all the time. Okay. That's the reason you need stop losses. You need protection. You need to be prudent. There's no entry. There's no setup that's perfect every time. Nobody knows what's going to happen. Nobody. No crystal ball. Okay. Let's see here. $500 to $5,000. We did a video on that. There's no timeline. Okay. That may take a year. It may take 4 months. It may take 3 weeks. Who knows? I didn't put a timeline on that. All we're going to try to do is be prudent and take $500 and get it to $5,000 by doing what? Swinging at strikes, not swinging at every pitch. If you're a coach, you're not going to tell your batter to go to the plate and just swing at everything. You're not going to do that. And oftentimes in trading and investing, we swing at everything. Just sit down at the computer and you're like, hey, I'm going to make money. Just open it up. Doesn't work that way. You have to be patient. You got to let the market come to you. You've got to wait for that strike, that fat pitch. Okay. And for me, just for me, the fat pitch for me is good companies that are on sale. And I love to buy really good companies that are showing on the daily chart less than 30 on the RSI. And to me, that's an oversold technical indicator. And that, I mean, it doesn't mean it's going to just jump out of that RSI 30 the next day, and I'll show you that. But most of the time, stocks don't stay oversold for an indefinite period. They're going to come out of it most of the time, especially good companies. Okay, and that's the operative word. They're good companies. Okay, so if you have a ticker, if you have a question, what I'm going to do is I'm going to go through my itinerary. From time to time, I will stop sharing that screen and go back to this screen because I can't see both. Okay, and I'll try to answer those questions. But thank you for being here. I want to help you. That's the reason I'm doing this. And we'll work together and be better tomorrow than we were today. So let's go to the trading platform and check that out. Okay, so you can see the S&P 500. I'm on a daily chart here. Looks like I've got it on a 6 month, I think. Let me check and see here. 3 month. Okay, I got a 3 month daily chart here. So we'll just deal with the 3 month daily chart, and you can see that the S&P 500, the market, if you will, we're in a massive upturn. Okay, uptrend, I probably should say. So we're at an all-time high. We clicked on that. Looks like Thursday at 779.37. So you really shouldn't be shorting this market. Okay, so if you short the market, you better be real astute with your investing, and you better be careful. It's certainly a long market, and you can see most dips have been bought. Uh, Holdings. The only thing that I'm holding right now is the one that I purchased on August the 11th, which is a Trade Desk TTD. I purchased the October 16. You can see it here, 15 call. I got 5 of them at 89 cents a piece. That equates to $448.32. Now, when I did that, I've got it noted. The RSI is 28. And if you remember the video, and I'm sure you do, I AI'd that, and the AI said that it dropped the last 3 years 13 times under 30, and it stayed there about 5 days. Well, look what happened here. It was under 30 on last Friday, Monday, Tuesday, Wednesday, and then Thursday it popped out. So that 5th trading day, it popped out of the RSI 30. Right now it's sitting at RSI 34.46, and we sold off Friday. We were down nearly 3%. So what is the future? What am I going to do? Well, I didn't sell it. Okay. I still have it. And because first of all, let's see here. Let me go to the trade tab. October 16, there's 62 days until expiration. And right now it looks like those calls they closed at $1. Okay. I think they're up about $1.30. I want to say they closed at around $1.30 Thursday afternoon. So I'm up a mere 54 bucks. I think I may have been up a couple $100. I can't remember. But the point is, I have plenty of time for this trade to work the way that I want it to work. And what's my goal? I'm thinking the stock can get up to $19. We've got an 18% short interest. It's not going to take very much good news for that stock to pop, because they're going to have to cover some shorts. Okay, they're going to have to buy some stock in order to cover that. And you can see the chart. I've got it. I'm going to make it a little bit bigger over here where I've got the trend lines drawn. You've got a support at 1283. And then last Thursday's high and low, we were looking at 1470 to 1358. So really, to be honest with you, next week, we really need to break above the 1470 to carry on, to fill this gap. Where's the gap? I'll show you right here below this candle to right here. So you're looking at an easy $3 gap. So we need to get above that 1470 to get to that top part. And we need to hold that support of 1358. That would be cool. Okay, and if the stock sells below the 1358, I'm going to be looking at volume. That's important to me, because volume to me means conviction. A lot of volume, high conviction. Low volume, not very much conviction. And that's exactly what we had Friday. Look at the volume Friday. Look at this. Look at these bars right here. Way down. I mean, the lowest volume that we've had probably in a week and a half on TTD was Friday. So that's not a lot of conviction. Now, guys, listen, bag holders. Do you know what a bag holder is? A bag holder is a person. I've been that person. Maybe you are. It's a person that buys a stock, let's say TTD, at $14 and has held it forever, 2 or 3 years. Okay, the stock goes down and then it comes back up to that 14 level. What do? We're like, oh, I finally get my money out. I've been holding this bag for a long time. So we get out. Okay, only to find later what happens to the stock. It goes up and we're like, golly, I should have held it. Okay, I should have held on to that and made some good profit. But because you're a bag holder, okay, you get impatient, you're emotional. And when you can get your money back out of it because you've been down so long, you get out of that stock. So the way that you don't become a bag holder is to put a stop loss on it. You buy at 14, you're like, you know what? If it gets below 1350, I'm out. And then you wait. If it keeps going down, you buy it later. Okay. And you're just wrong at that particular time. Don't be a bag holder. And if you are, learn from that. Okay. So when the stock comes back to your point, whatever stock it is. If you bought something at 50 and it gets back to 50, sell half of it. Don't sell it all. There's a reason it's come back to 50. Okay. It's already in that uptrend. So you don't want to sell too quick. But one way you could do that is to sell half of it and hold the other half. Okay. So I'm still high on TTD. Really, really good financials. Let's see what happens next week on TTD. Trade Desk. Okay. So that's the only thing that I'm holding. Let's look at the history. Okay. For the last 2 or 3 weeks, I have bought and sold stock that fell below the RSI 30. And let's see, one of them, I sold Tesla this week, and I put out a video on that. It's kind of the same deal with TTD. It fell below 30. I can't remember how many times the last 3 years, stayed under it about 3.5 days. So I listed here on this chart. It was under RSI 37.23. You can see it here. And then it popped out on 7:30. And right now the RSI is at 48.81. You can see the arrow I sold here around 342, 43, something like that. I can't remember, but made some money on that. I had an option and shares on that bit. I still own it, but on that particular trade here, what trade are we talking about? Right here down at the bottom on 7:23, Tesla got under 30 RSI. And look, it stayed under there for 3 or 4 days, like it says here, and then it pops out of there. Okay, so that's what we want to do. We want to take good companies, and when they're oversold, we want to buy them, and we want to make sure we got plenty of time. If we're not buying shares, we certainly want to make sure that our options contract is at least 30 to 60 days out to give us enough time. If we don't, theta decay will kill us. And when it does go up, just like it did Friday, I captured the profit. It could keep going up. Tesla needs to get to this 369 level. Big gap there to fill. It gets above 369, we're off to the races on Tesla. Okay. Another one that let's see here. Oracle. I bought Oracle. You can see down at the bottom these red dots. It got under the RSI 30, got out of it. I mean, it was up and down on the RSI 30, and then finally, boom, it popped. Well, when it popped up here, I sold it, I think at 145. Made really good money on it. Did I sell it too quick? Well, look at the price. It's 150. Sure, I did. Okay. But are we always going to be able to sell it at the right time and buy it at the right time? No. So I just, green is good for me. And I think I did a video that when the circus is in town, what do? You sell your peanuts. So I had doubled down on this dude, and it got a good pop on it, and I captured my profit. Okay, so another one, let's see. Let's go down to AT&T. I bought AT&T, made some money on it. When did I buy it? Right in here, when it got under the 30 RSI, which is at the end of June. It got out of it, and I sold it. Okay, made some good money on that. I don't remember how much, honestly. Okay, let's see. Let's keep going. Halliburton. I bought it right in here. No, I bought it right there where the arrow is. So around 721, I believe that's right. I may have bought it in here too, but I ended up selling it. I didn't make real good on it, but I got my money out of it. But I held it for a while, and I got a little bit impatient. Okay, so let's keep going. Dow. I bought Dow. I still got it up here. I bought Dow 622. The 30 calls, $305. Only bought one call. I sold it Friday and lost over $100, $110, I believe. Let's look at it. It was 305.60, and let's see, the 3241. Yeah. That's not the right one. It was September 18, excuse me, 185 to 2. I think I sold it pretty close to $2. It was about 110 because it didn't expire until September 18. That's a great question. I got tired of this consolidation. Okay. And you can see right here, the stock's been consolidating, going sideways for really about 3 weeks. And the number two, the stock does not trade very many options. You can see here only 41 options traded Friday. So in retrospect, to be quite honest with you, I probably wouldn't buy it again because it's so thin. I got so focused on a good company. Here it comes, a good company that was oversold. But when it comes to options, I was going 60 days out and I was looking here and I'm like, that's pretty thin, but I went ahead and did it anyway. So looking at it today, I would not buy Dow. If it goes under the 30 RSI again, I won't buy it. Why? Because it's just too thin. There's not enough volume. You've got to have volume if you're going to buy options. I don't care if it's 60 days, 30 days, 90 days. So all of that stuff matters. If it doesn't have really, really good volume, you're going to have a really wide bid ask, and it's going to be hard to capture anything. So here's the thing. The stock right now is at 31.07 and I lost $100. And where was my strike? My strike was at $30. So the stock's over $1 over the strike and I still lost money. Are you with me here? And a lot of that's because of theta decay. A lot of that's because of the volume. And it just was not, it just didn't have enough volume. Now, I could have bought shares. This is one of those that you can say, I'm not buying options, I'm buying shares. Well, in retrospect, that's probably what I should have done. Okay. All right. I hope you got that. Let's keep going here. I'm looking down through here. I bought Tronox. I bought Tronox right here when it got up under the 30 RSI. It looks like that was around 716. I did not buy options. I bought shares. I bought 1,000 shares, I think at 575. Excuse me, right after earnings. I sold it right up here close to $7 a share. Made about $1,000 on that. Okay, I'm glad I captured my profit on that because you can see what happened. Boom, it kind of puked on us. But why did I buy shares and not options? Well, you can see the September 18 options right here. I mean, there's just no volume whatsoever. So I made a good decision with Tronox, saying, you know what, it's too thin. I'm just going to buy shares. Should have done that with Dow. Here's another one that I sold. I bought Ions right here on July the 16th. I bought a September 1855 call. One call, 489.66. I did sell that last week and made a little bit of money. Not much. Let's look right here. The 55, around 520. Okay, but here again, thin. Really, really thin. Okay. And so when I sold Dow, I was like, you know what? Ions is the same way. I need to get out of Ions. It's just too thin. I would have been better to buy shares than that. You know, 100 shares, $5,500 rather than buying this one call for $500 just because of the thinness if I wanted to. So what's the lesson even for me? Okay, I've been doing this a long time. The lesson is good company, oversold, but you have to also factor in volume. Lots of volume. If you don't have lots of volume, you got to go shares. If you don't want to spend that money on shares, forget it. Okay, so that's what I should have done. I should have bought 100 shares, or I should have said to myself, forget it. I'm going to deploy that $5,500 somewhere else. Okay, let's see. So that's pretty much about the history of Netflix. I skipped that one. I bought and sold Netflix and made good money on that. When did I buy it? Look at here. Under the RSI 30 on 7/17, and Netflix was rolling over. But last week we noticed that Bill Ackman, the hedge fund guy, did make an investment in Netflix, and I think it popped a couple of dollars one day last week. So it may catch a bid now that there's a big hedge fund guy that's put it in its portfolio. But I did get out of that and make a few dollars. Proud of that. I'm going to talk to you briefly about a few stocks. Somebody texted me about, didn't text me, but direct messaged me about Redwire. So I want you to see Redwire. And I looked at it, and we've had some consolidation on them since they had earnings. but Redwire needs to get over 1410. I hope you can see that. It gets over 1410. The next resistance is going to be about 1806. But listen to me carefully about space stocks. All of the space stocks, Redwire, Rocket Lab, ASTS, all of these are good companies, fast-growing companies, but they've all done and may do this some more. One thing, they're issuing stock to raise money. And every time they issue extra stock, they dilute their shares. And that's going to make the stock go down. So you have to be careful. And I guess this is something I would say to anybody that's in any of these or you're wanting to get in them. If you have a big profit, you need to take it. Okay. Because oftentimes when they announce these stock sales, it's after hours, stock's going to gap down. And certainly when it opens up the next day, if you're not trading 24, if you're not trading after the market and pre-market, you're going to get killed. Just like Redwire, they could Sunday night, tomorrow night, they could announce, a $500 million shelf offering. Well, I can tell you that it'd probably open up at least $1 down Monday morning. Okay, so keep that in mind. These growing companies, like these space companies, to build their cash, to grow their company, and they're doing really well, but they have to get that money somewhere. Instead of borrowing the money, they just offer stock, and that dilutes the total shares, and that's going to bring your share price down. So don't forget that. Okay, another one I wanted to look at real quick is probably the most popular stock out there, SpaceX. Okay, so SpaceX, man, we've gone from 104 to 150 in a matter of a week. Wow. I mean, congratulations to you that if you bought it at 104, I don't have it. I'm going to buy it. Okay, I'm going to have a position in SpaceX sometime. I don't know when. I want it to come under the RSI 30, but it may not do it. It got down to about 32, right in here, 727. Well, actually, not 727, 731, 32.91. And I thought, well, this thing, it's going to get right at 100 or right under it. Boom, I'm pulling the trigger. But it didn't do it. And why did it go up? Why did it just catapult up? Well, short interest, short covering. Right here, if you can see this cursor, and I trust that you can, but right in here, short interest is at 34%. And that would be about 8.6. And then all of a sudden, okay, right after they released all of those shares, those 300 or 900 million shares, the short interest goes from 34 and it closed Friday at 16%. So it's been cut in half. The short interest has, meaning people have covered, a lot of people's covered their shorts. Some of them haven't. So when they cover those shorts, that's going to push the price up. Remember, to be short, you have to sell it here and buy it. So you've got massive short covering. And then also, let's just call it the way it is. We've got some institutions that's come in and bought the stock. Now, if you notice these white letters and numbers, okay, these are the dates and the shares that will be released in the future. So in a couple of weeks, on August 21st, you got 319 million. September the 9th, there's September the 10th, September the 24th, 3 times in September, I'm looking at 800 million shares. If you total that up, 700 million, excuse me. And then in October, 328. But look at November and December, over 1 billion shares each month. So a lot of shares are going to be released on the market, increasing that supply. So I'm looking for the short interest to continue to come down. Okay, and then we'll have to have nothing but buyers to push that up. So I do think that we have a good chance to buy SpaceX cheaper than 140 a share in a couple of weeks. Now, do I know that? I do not know that. I mean, it may be a 180 next week or 200. I mean, it can do that. I think it's a fabulous company. If I were young and if I said I'm going to buy one stock, which I would never do, I would never recommend, But if I was just going to buy one stock, that would definitely be the one to buy probably for the next 20 years. You know, what a prudent man's going to buy the S&P 500 with most of his money and just sit back. Okay, take that 12% that we've averaged on the S&P 500 the last 80 years and just sit back and watch your money double every 6 years or so. Okay, all right. So let's. We've talked about holdings. We've talked about history. And all of these trades that I've talked to you about are swing trades, not day trades. And I can go ahead and stop right now and say, with emphasis, I would rather you swing trade as day trade. Your chances of success are exponentially better. It will make you a more patient investor, i.e. trader too. And I just think it's the prudent way to invest and trade. Okay. Day trading is so hard. And unless you have the time, you've got the ability, you've got the research and all of that stuff, it's very hard to be successful. Can you be? Sure you can. But most people blow their account up when it comes to day trading. Not many people are going to blow their account up swing trading unless they just take everything and put it into one stock, okay, which you should not do. And I think I've got a video on that. So let's do this. Let's stop sharing. Let's get out of this. Let's go here. And I should be back to the screen. And I see Trent, I see my son. He says, is it cutting out on anyone else? And let's see. I'm just going to look at the chat. Thank y'all for being here. Let's see. SpaceX. Yep, I was waiting for $100 as well. Okay. I'm just going to read these real quick. Here's a ticker, Wendy's. So I'm going to write these tickers down. And when I go back to my trading platform, we will look at that. Let's see. Wendy's, I think, announced earnings this past Friday. 30 to 60 day expiry. That's true. I'm big on having options contracts that are at least 30 days out, preferably 60, because I want the theta to work with me, not against me. Let's see here. Buying shares or call options. I buy both. I bought both shares and call options on Tesla. It's just according to who it is and what it is and all of these things. Let's see. Thank you, Matt. That's very nice of you to say what you just said. Let's see here. $19 would be awesome. Do you have any concerns about a serious pullback in the future? Sure, I do. We're talking TTD. Who is this? This is James. I'm not going to read your last name, but anyway. But yeah, I do. And I think I may know who that is. But anyway, yeah. I mean, but I think it will hold. I think TTD will hold that 1253. I think that's a really floor. That's the floor down here. Okay, the ceiling right now is the 1470. So I mean, technically, if this dude comes down, if it were to gap down $1 Monday, I'll take my loss on it and get out. I don't mind telling anybody. Okay, I certainly don't want it to get below the support. It gets below the support, we're going to have a problem. Okay, there's some things that we hadn't read about, and all I would say to everybody, hey, Neil, I'm wrong. Even though it's RSI under 30, I'm wrong. That's okay. Let's take my loss and let's move on. Let's go to the next one. Let's look at it again. But I don't think it's going to do that. And the reason I don't think it's going to do that is because we just didn't have a lot of volume Friday. Even though the stock was down 3%, I just didn't see a lot of conviction. But who knows? I don't know. So we'll see. Okay. Hello, Neil. Glad to have made it. Glad you're here. Sorry about the technical difficulties. I'm normally pretty punctual. I know that sounds like an oxymoron because I was about 2.5, 3 minutes late tonight. But anyway, I think that's all I saw was Wendy's as far as a ticker. And I hope everybody can hear me okay. So hopefully you can. If you can't, let me look at my phone. Trent, if you're still on there, you let me know and make sure that we're good to go. I see Lowe's, I see Deere, I see Lowe's is going to announce next week. So is Deere. I don't know about Coke. I think Coke announced a couple of weeks ago. Baba is going to announce next week. Okay, you're good now. You're good now. Okay. Thank you for telling me that. Hope I'm coming in loud and clear. Brett, thank you. Okay. All right. So I'm going to keep going here. I'm going to go back to my screener. So what I want to do now is I want to share FinViz with you. Okay. I hope everybody, if you're interested in how to screen for stocks that are selling less than 30 on the RSI, you go to a free website called finviz.com. I hope you can see it. Okay. You should be able to see that. And what I'm going to do, I'm going to walk you through the metrics that I put in for that. It's really simple. Okay. It looks daunting, but it is not. So you can see at the top right here, all of these different things. You got a news, screener, charts, maps, all of this stuff. Go to screener and click on it. When you click on the screener, okay, there again, you're going to be like, what is going on? Well, don't worry about it. Just stay with me. We're going to get this. It's not a problem. Go to all. See right here, descriptive, fundamental. Go to all, click it. When you click all, you've got all of these different filter metrics right here that you can click. And every time you click one of these, down at the bottom right, it's going to reduce the amount of companies that it puts out. Right now, we've got 579 pages. We're talking 10,000 share stocks. You got 10,000 companies in this database. So the first thing I do is I look at the market cap. And here's a cool thing about FinViz. Hey, man, I don't know what a market cap is. Well, put your cursor right over the market cap. First column, you see it? It says total market value of a company's outstanding shares. Share price times shares outstanding. So what does the market cap mean? If I have a company and it's selling for $1 a share, and there's 1 million shares, guess what my market cap is? $1 million. $1 times 1 million. Now, when I'm looking for opportunities, I'm looking for solid companies. I'm not looking for small companies. I'm not looking for startups. I want some established companies with a decent market cap. Okay. So what I do is I click on this any and I go down to mid plus mid, and that means it's over 2 billion. So I'm going to click on over 2 billion. I want every company that it filters for at minimum $2 billion market cap. Now, I don't know if you noticed, but my bottom right-hand corner now says 108 pages. It went from 579 to 108. We're not done. Now, remember, what are we looking for? We're looking for companies that are on sale. How do we determine that? The relative strength index below 30. So the second column, if you slide down about nearly a little bit below midway, you can see RSI. What does that 14 in parentheses mean? The last 14 trading days. That's a default setting. It's going to be that way on any platform that you do. You can change that. I'd leave it alone. That's what you're looking for. Relative strength index over the last 14 days. Click on that, and we're going to go to oversold 30. Now we're down. Do you see the bottom right-hand corner? It says 2 pages. We only have 2 pages now. Are we finished? No. Now remember, we're looking for volume. We want companies that has a decent amount of volume. If you don't have volume, you can't get into stock, out of stock, even if you buy shares. So you got to have quality volume. You need to filter for companies. It's a minimum of 1 million shares per day. So what you do is you go right below this RSI metrics and slide down about 3, and it says average volume. And if you roll your cursor over, it says average number of shares traded per day. We're going to click that, and we're going to put over 1 million. So when you do over 1 million, I can see now I only have one page of companies. When I scroll up, I'm just going to see one page of companies. We've gone from 579 to one page, but we're not finished. This is a personal preference. You don't have to do it. But I always click, I go all the way to the right where it says country at the top, last column. And right now it's any. And I put USA. I click the USA. I just want to focus on companies that are based out of America. Okay. I'm not a nativist, but certainly I just feel better. But I don't want to focus much on companies that are based in China, Korea. I know somebody's looking at Baba. Baba is a good company. I have traded it before in the past, excuse me, but be careful. Be careful with these Chinese companies because the government can, they can snap their finger and a company has to stop doing business just because they say so. It's a communist country. So keep that in mind. It can be pretty volatile. And remember, Jack Ma went missing for a long time, and everybody's like, "Where's he at? Where's he at?" So I just there's just too much opportunity for me in American companies, so I kind of focus on that. But hey, it's your prerogative, and I'll still look at Baba. I'll tell you the technicals on that in just a second. Okay, so I scrolled up and I'm looking at 9 companies. So right now, 9 companies Friday with a market cap over $2.5 billion. It trades at least 1 million shares a day. They're based in this country, and they're less than 30 on the RSI are populated right here. So what I do is I look and I'm like, do I see companies on there that I'm interested in? I'm not interested in GameStop. I'm sure you remember that meme stock. I'm not interested in that. They're trying to kind of make a play for eBay, and but that's just me. But they are oversold right now. Okay, and they're at $18.66 a share. PE is 14.22. You can see if you scroll or if you look across there, it'll tell you the sector, the industry, country, market cap, PE price, percent change Friday, and the volume that it traded Friday. The only company that I would probably look at further would be Under Armour. Okay, Under Armour is an apparel company, and when I first see Under Armour, I notice it's a $5 stock. Well, that's a negative. Now, when I was 25 years old, I'd salivate. That'd be the company I'd want. I'm like, man, that's a cheap share. I can make millions on that, stuff like that. You know how you think. Today, I know that institutions don't like to invest their money in companies less than $10 a share. Okay, they like that 18 to 20 and above because that's going to tell them it's a more stable company, a bigger company. These $5 stocks, even though it's a big company, at least $2.5 billion, we know, it's got some problems. But if you want to, we can look at it. So this is what I would do if I weren't, if I'm just at home and I'm like, okay, I'm going to check Under Armour out. So I would go right here. And when you put your cursor over the stock symbol, you can see that the chart populates. You can click it, and it's going to carry you to their daily chart. Okay. Looks like it's about a 6-month, 9-month chart. And you can see the price got up to $8 a share back, it looks like about the end of February, but it's come on hard times. And down at the bottom, these E's are earnings. Okay. And you see red and green. And let's scroll down, and it gives you all this financial information. Okay. And then look at this gap earnings. We're looking at a company in 2018 that lost 10 cents a share. Okay, the next year they made 20 cents. Then look at that, they're down $1.21. The company since 2018, I think you would agree, the earnings doesn't look good. Well, let's look at the sales. The sales looks pretty, you see this, it's pretty much the same. There's no uptick in it. And if anything, the last, looks like since 2022, it's doing this, it's coming down. So you've got sales coming down, you've got earnings coming down, and the shares outstanding, that looks pretty good. They haven't increased shares, but I'm looking at up here at these metrics. Let's look at, they got a lot of debt. I don't like it. I don't like Under Armour. Does that mean it will not do great? It's got plenty of volume. Okay. It's got volume. It's got the market cap. I just don't like it. And I'll tell you what's in the back of my mind. The back of my mind is Nike. Okay. Who's best of breed when it comes to this? It's Nike. What has Nike stock done? Nothing. I mean, oh my goodness. I mean, it's gone down. But I mean, so if Nike's having problems, do you think Under Armour is going to have problems? Sure they are, because Nike is your market leader. I just think that particular company in that particular industry is just not a great company. And looking at their financials, looking at their debt, I just don't like it. And I just think that there's better plays. So not interested. That's it. And you can look at the analysts. You can scroll on down and you can see news. You can see analysts, what they think of it. And you can see there's a lot of downgrades. The price target here, the latest one on August the 11th is $5. It's at $5. So I just don't like it. Okay. All right. So I am going to stop sharing on FinViz, and I am going back to our page right here and look, and let's see here. See if I see anything. Target, you want TGT? Somebody wants to see Target. We'll look at that in just a second. If I miss somebody, if I miss a symbol, let me know. On the 5-minute chart, you have back tested when buying RSI on the third. The trade is negative and hold the trade to the next day. A lot of times the SPY will get the gap up. Good point. Trading logics. Logic. That's a good point. I have back tested that. What I do on the RSI on the 5-minute chart, that's going to be a day trade. I'm not going to hold that for the next day. Okay. That's going to be an hour trade, a 30-minute trade. And oftentimes I will buy the RSI less than 30 on the 5-minute chart. And then when it trades up, okay, and it gets up to maybe 70, 65 to 70 on the RSI, I'm out of it. I'm going to capture that profit. So that's going to be a quick day trade. Okay. I hope I read that right. And when the trade is negative in holding, look, most of the time you're better off on the SPY, okay, to make that a day trade and not carry it over. If you carry it over, a lot can happen overnight. And when stuff happens overnight, oftentimes it's going to be, it can be either good or bad, obviously. But that's a risk if you're willing to take that. Okay. So the next thing we're going to do, let's go to a chart. Let's look at a chart. So let me go to the chart. Now, everybody, I'm going to stockcharts.com. Free. The only bad thing about it, tons of advertising. So let me show you what the RSI, first of all, let me show you how to set this chart up so that you can see the RSI of any company. Okay, and the first one we'll do is Under Armour, UAA. So you got to know the stock symbol. Do you see what I just did? I went up here in the upper left-hand corner and punched in UAA. That's Under Armour. Okay, so I'm going to click go. And right here, it's going to populate a default chart that I don't like in stock charts. So if you don't like the chart, if you don't like the timeline, you can change it. And I'll show you how to do that. Okay. I'm going to scroll down. Well, first of all, it doesn't have RSI. So I got to put RSI. So I'm going to scroll down. Okay. And I'm going to do this slow. That way you can watch it. You can re-watch this later. At the very, it says chart type. I don't like these bars. I like candlesticks. I'm going to click on it, and candlesticks is your very first option at the top. Click candlesticks. I'm going to go over to years under period. It says period range years. I'm going to click years and click 0. I'm going to click month and click 3. I just want a 3-month chart. Okay. So I've got candlesticks on chart type, and on period, day, months 3. You're just looking for a 3-month chart, or I am. I'll slide down to the indicators. Don't worry about your moving averages. You can leave those 5,200 and 20. That's your prerogative. So I'm going to go to price performance. That was at the very top of this chart. I want to replace that with, guess what? RSI. So I'm going to click on it, and I'm going to scroll down till I find RSI. There it is. I'm going to click it. Now I've done I've changed it to candlesticks, 3-month chart, and I changed it to an RSI indicator. But I still have to click this blue square that says update chart. I'm going to click it, and then it carries me to the chart that I like to see. Do you see Under Armour? And right at the top is RSI, and it says it's 29.81. So it's less than 30. That's the reason it populated on FinViz. Now you can look here. It hasn't been, it looks like it was under 30 RSI back here. I'm over here to the left. You can see my cursor back here around maybe May 18, kind of pretty close. Now notice the black lines here. Here's one at 70 and here's one at 30. And remember what we said, over 70s overbought, under 30s oversold. And you can look at this price line here and look at what the stock does. It gets up to nearly 70. It comes down, goes back. It got over 70, got a little bit overbought. What did it do? It came down. Okay. So it's been kind of on a downturn right here. And we bottomed out? We may have. Okay. But it's just one of those stocks that I just don't, I'm just not interested in. I don't like this consumer discretionary clothing. And, if I wanted to really, I guess, get excited about that, I would look at Nike, if that makes any sense to you. But I wanted you to see how you could go to stockcharts.com, totally free, and how to punch in this chart to where you can have a 3-month chart and you can see with your eyes, hey, there's the RSI and there's where it is right now. Okay. So that's how you find and look at it on stockcharts.com. You don't have to have Thinkorswim. You don't have to have a trading platform. All of this stuff is free. Okay. You can do it on your phone. You can do it on a laptop, a PC, Mac, whatever. It doesn't matter. Especially if you're swing trading. Okay. Now you need all of that stuff. You need a trading platform if you're going to day trade. I would recommend it. But for swing trading, for sure, you can do all of your homework after the market closes and giddy up. Okay. All right. So I'm going to stop sharing and I'm going to go back to the chat and I'm going to look and I see TWO, stock symbol TWO. I've got about 8 of them. What kind of profit do you typically see doing the 5-minute SPY day trade on options? Oh gosh. Well, that's a relative question. Normally when I buy SPY, okay, I'm going to buy 3 contracts. Normally 3 contracts. It sells under the 30 RSI. Why 3? Because if I get a 25% push on my contracts, I normally will sell 2 of them and capture that 25% profit. And then I'll take the 3rd contract. I've got 1 left. I will put it right below where I sold it. And that way, if the SPY keeps going, okay, I'll start moving my stop up and I'll try to capture that profit. So you can see I'm very, very protective when it comes to that. So you can easily double your money. Most of the time when it works right, you're going to double your money. You're going to make 100%. Okay. And if it doesn't work, you're going to end up, I try to get out about 25%. Because here's the thing, if I'm buying SPY when the RSI is below 30, now think with me, it's already gone way down here. So if I'm wrong, I want to go ahead and get out. It may go down further for the next 2 hours. Okay, and then I can always get back in. There's not a wash sale rule. I don't have to worry about that. I'm buying options. And by the way, I don't buy 0 DTE. 0 days to expiration. Never do that. And I know a lot of people do that. You probably don't want to hear that. I'm just telling you, I don't do that. I always buy SPY options the next day. Okay. And if I make a trade, if I were to make a trade at like late in the afternoon, I do it day after. But usually I want to make that trade if I'm sitting here and I'm day trading. Okay. I'm usually wanting to make that trade if I can. Okay. If it sells off within the first couple of hours, then I've got the rest of the day for it to work. But if it doesn't do that, most of the time I'm out. I'm done. I'm not going to sit here all day. Okay. But the point is, I'm sure not going to push it. I'm not going to pressure myself. I'm going to look for what? That strike, that fat pitch that gives me a chance to hit the ball a whole lot better than trying to swing way down here or way up here. Okay. I hope that helped you just a little bit. Okay. Use Brave browser, get rid of the ads. I didn't know that, James. Thank you. I'll keep that in mind. Okay. So what am I looking at next week before we get to the tickers? Let me share the Stock Trader Network. I'm on X. Neil Ellis 16, I think, is the username, but I don't follow Stock Trader. I follow Dennis Dick. He's a trader. I follow 3 people on X, and two of them are option folks. I don't pay them any money. All these people's got money they want you to pay every month. I don't do any of that. But Dennis Dick has been trading professionally for 22 years, and he's part of this Stock Trader Network that you have to pay for, but this is free here. And they put this out every Friday, and it tells you the next week's earnings reports, the companies that's going to report earnings. It gives you the economic data. And it also has down at the very bottom here, it has any kind of company news that they're going to do, any kind of meeting, any kind of investor type advisor meeting, whatever, if they got something going on. So the first thing I want to look at is economic data. What stands out to me that's going to report next week when it comes to the economic data that might move the market? So I'm looking at Monday, and I'm looking right in the middle here, guys. Right here, econ data. Okay, this is economic reports every day. This is going to be in Eastern time zone. I'm in Northeast Mississippi, so I am Central time zone. So that's going to be 7:30 to me, 7:15. So we got housing starts on Tuesday, building permits, pending home sales. The FOMC minutes that could move the market at 1 o'clock. We've got 12 Federal Reserve banks started by Woodrow Wilson, if you know your history. And so we got those 12 Federal Reserve banks peppered all throughout our country. They got 12 presidents. And I don't know if you know, but last time they met, 9 out of the 12 wanted to raise rates. They didn't raise rates. Okay, so these minutes are going to come out Wednesday at 1 o'clock. So all of your big time institutions, your algorithms, they're going to be reading those minutes. And in those minutes, if those guys are hawkish, meaning they want to raise rates, get way up in the air, okay, that'll be bad for the market. The market could sell off, okay? And you need to know that. You might be at work and, after lunch, the market's doing good, and you look at the market, if you live in here at 115 and the market tanked, probably going to be because in the minutes, most of the Fed presidents are saying we need to raise rates. Okay, inflation is too high. We're going to have to slow the economy down. So news moves the market. Don't forget that. Fundamentals, yes, they're important. Financials, yes, they're important. But news will move the market, and you need to know what the news is that's coming up. Elon Musk goes to the hospital for a heart attack. What do you think happens to Tesla? What do you think happens to SpaceX? It'll go up or down? It's going down. Okay, so news will move the market. All right, so Thursday, I see jobless claims. That's every Thursday. You know what? I really don't see a lot of big events coming up next week on econ, economic reports. Like last week, we had CPI and PPI. But the 1 o'clock Central Time FOMC minutes could move the market Wednesday. So I'll be watching that. Okay, so now let's go to earnings. Who's reporting earnings? And you've got pre-market, okay, before the market opens, 8:30 Central, 9:30 Eastern. You've got pre-market. You've got several companies. Nobody Monday. Tuesday looks like you've got Home Depot. That'll be huge. Okay, what about the housing market? 60% of Home Depot's sales are dealing with contractors. Okay, Lowe's is not as much. Lowe's depends more on retail. People like me and you going to get 2x4s to do a little home project. Okay, but Home Depot is certainly they are a directly related to mortgage rates, the housing industry, etc. Not to say that Lowe's isn't either, but Home Depot a little bit more. Okay, so Wednesday, there's your Target, TJX. There's Lowe's, Estee Lauder. Thursday, Walmart, Alibaba, John Deere. I tell you what I see Friday, BJ's retail. Next week is retail. I don't see any big, tech company. After the market closes on Tuesday, I see Lazy Boy. That's same thing, retail. I see some crypto. See Webull, there's Ross Stores. So next week's all about retail. And look, you can play earnings. You can buy calls, you can buy puts right before they earn, and you can do really well. And I'm sure some people that are listening have done that. And probably the people that are mentioning Lowe's, Deere, Baba, Target, you probably got that on your mind. What I think about that, well, what I think they're going to do. And I'll look at the chart in a minute, but can I implore you to not play the earnings, because really it's a coin flip. It's just a gamble. And if you don't win, you're going to lose all of your option. That's it. You're going to lose it all. You could even buy in the money. You could buy Walmart for $100 a share and still lose money, because here's the thing. Now you need to remember this. Next week, all of these companies, Walmart, Home Depot, Target, Lowe's, everything that's on that screen, the IV, the implied volatility on the options, is going to be way up. And the day, Thursday morning, when Walmart does their earnings, that implied volatility is going to crash. And what that's going to do, that's going to bring the premium of the option way down. So you could have a 115 call on Walmart. Walmart has great news. Stock goes up $5, and you're like, wow, I'm going to make money. And when that dude opens up at 8:30 Central Time, your option that you bought for $2 could be trading at 140. And you're like, what the crap? And you're like, how do you know that? How do you think I know that? It's happened to me. I know that. Okay, so you're really better off, if you're interested in these companies, purchasing them after the earnings. Then you can get a fix and a feel on what's going on. But I know some people don't want to hear that. But anyway, you can go to X, you can go to Twitter, the old Twitter here, and you can go to Stock Trader Network, and you can pull this up every Friday, and it'll let you know about the economic data for the upcoming week and also the earnings reports for the upcoming week. I'm going to stop sharing. Okay. Go back to the chat and see if we got anything else here. I don't see anything. Even if it beats earnings, the stock can drop. Very good point. And here's another thing. I didn't even think about that. Okay. Earnings are the past. On the earnings call, or even in the minutes, if they forecast, if they forecast a little bit less sales and earnings than what the analysts are talking about, even though they blew it out last quarter, that stock will tank. They not only have to beat earnings for you to make money, but they have to have a very positive forward guidance. And it's just, I just think you're better off. There's better ways to make money than gambling. And really, that's what you're doing when you're buying calls or puts ahead of earnings. I'm just going to say it like it is. Okay. All right. Let me look at my notes here. Okay. Let's go to these stocks here real quick. I've been on here 1 hour. If you're still on here, I appreciate it. I appreciate you. So I'm going to share my trading platform, go to the window, and I'm going to go to a daily chart. Okay. That's where we're at. First stock, Wendy's. WEN. Okay. So you can see they announced earnings last Friday, 18 cents a share. Okay. That they estimated 16, so it was better. You can see the stock gapped up. Okay. So we're at 864, closed Friday, and I'm looking at double inside days. That's what that little dot right there represents. Okay. We've got a high and low that's inside the previous day. So this is pretty simple. I can't remember who asked me about Wendy's, but here it is. That stock needs to get over 882. If you own it, okay, hold it. Don't buy any more unless it gets above 882. It gets above 882, it's going to 945. That's your next stop right there. Got it? I put 9. I've got that too wrong, too high there. But that's your. Let me bring that down. Not that it matters too much, but anyway, that's what I would do. Now, what should I do if I own it? If I need to get out of it? Well, technically, honestly, the stock, the support's right here. The support's all the way down to 7. So if you can stand it, I would probably hold on to it if I had shares for sure. And if it came down to, if it came down to $8 or $7.50, I just bite my fist. But if it got below 7, I'd get out. Okay. If I owned it right now and I had a really good profit in it, I would still hold on to it and see what it does Monday. We've got 2 inside days. One would think that it's going to go above this 882, catch a bid up there, or it could get below right here. If it gets below 835, if you want to call it real easy, there's your 2 figures. If you own it, you could get out of it at 835. Right there's your intermediate support. And if you want to buy more, you could certainly do it if it gets over 882. But if it gets over 882 next week, it should go to 950 with no problem. Okay, there's not a whole lot of resistance up there. It gets over 950, there's no bag holders. I mean, it's off to the races. We're talking double digits. It could have a great rest of the year. Wendy's, I like their products. So if you're in it, congratulations. Hopefully you've done well. And I'm going to look real quickly at the options. And I think I would probably, I don't know what you're doing here. I don't know anything about your thought process, but the options are a little thin, to be quite honest with you. So, really, you need to be shares. You need to buy shares, 100 shares, $800. So I would probably stay away from options on Wendy's. All right, Lowe's. Let's go to Lowe's. LOWE. All right, Lowe's. We can populate here. Come on. LOW, my bad. LOW. Lowe's is in consolidation, guys. You can see it right here. Certainly $200 is a key level on Lowe's. It's got to stay above that. You'd want to get out of it for sure if you're in it, if it gets below 200. But it's really in consolidation. And I don't see anything that stands out other than this level right here. If it gets above 224, it's going to 228.81 is the next stop. So let's look and see what the expected move is on Lowe's. So let's go to August 21. Let me minimize this where it don't mess you up. Okay. All right. So right here is next Friday's options on Lowe's. So it's trading at 218, and man, there's some thin options right here on Lowe's. So the 220 has got the most open interest there. that's closest to it at 1,300 option contracts. And look at that bid ask, 440 to 560. Wow. Implied volatility, 52%. They're expecting Lowe's to move about $12 a share. There it is. If you don't know how to do that, you can look at your call and look at your puts and put them together, and then you'll have your expected move, how much they think the stock is going to move. Now, that's tonight. But right now, they're expecting it plus or minus, it says over here on my platform, 1179. But you don't have to have that. Like I said, you could look at the ask on the 220 put, 750. The ask on the call is 560. So 7 and 5 is 12. That'd be 1310. So that's pretty good over there the way they've got it. So pretty good little move there for Lowe's, but there again, looks pretty good. But it is in consolidation, and so the support on that's going to be 200, and I would watch that. But above 200, it needs to get above 225, and if it has good earnings, and if it has really good forecast, it'll blow past 224. May even blow past 228. Okay, all it had to do is do the expected move. You know, you get 12 on that from 218, you're talking 230. So it could easily get to like a yearly high here on Lowe's with really good earnings. Okay, so that's Lowe's. Deere, Big Green. We got a good uptrend on John Deere, and John Deere, you can see right here, your support's going to be 577. Your resistance is going to be 644. So right there's your channel. And as long as it needs to break out of that channel, what's the expected move? The expected move is $32. Implied volatility, 55%. Okay. So we're talking a $32 move is what they're expecting next week on John Deere. The chart is just in consolidation. There's not really any conviction either way. And you can even look at the volume. You can see way over here, lots of volume in May, June, July, and volume has really come down leading up to earnings. So a lot of people are pretty reticent, not knowing what's going to happen. So good luck on that one. But keep in mind, 577, 643, Coca-Cola, good company, good earnings. I remember a good uptrend, all-time high 90.92. Everything looks really good on Coca-Cola. Look at those moving averages that are stacked and they're trending up. You got a higher high and a higher low last Thursday and Friday. Coke looks pretty strong. Not only that, but it's a defensive name. And owning defensive names when the stock market is at an all-time high is not a bad thing, because the first thing they're going to sell off is tech. The NVIDIAs, the Oracles, the Teslas, all of these big techs, they're going to sell them off when the market pulls back. Why? Because all of those companies are in the top 10 of every major mutual fund out there. So they're definitely going to sell that off. Okay, I like Coke. And so your support on Coke is going to be 85 and resistance 90. Gets over 91, we go to 100 for sure and look for a stock split. Keep that in mind. If you own shares, hang on to Coke. Looking good. Okay. Hope I'm doing okay. Baba is announcing earnings. Looks like before the market on 820. And Baba's been in an uptrend from $92 all the way up to $124. It has pulled back just a little bit last week. Okay, and that's probably people taking profits, a little bit concerned about the earnings. I don't know. But according to this chart, okay, Baba is definitely in an uptrend, which would make one think that most of the smart people are like, you know what, they're going to have pretty good earnings, but I just can't participate because the company's out of China. But so you're looking at 121, 132. There's your mark, support and resistance. and they're expecting a $9 move on BABA next week. $9, one way or the other, up or down, $9. To keep that in mind. If it beats earnings, it's going to go to definitely a yearly high over this 136.78. Okay, that's BABA. Let's go to Target. Target has had an exceptional year. Look at that chart. There's your picture perfect chart of an uptrend. And man, I mean, you're talking $117 back in May. And this thing traded at 156.47 last Thursday. Had a little bit of a sell-off Friday. It may sell off a little bit toward earnings day, so keep that in mind. But you know, you're looking at on the obviously on the resistance 156.47, and then right in here I would put a floor at that top of that candle. So your support should be around 143. Okay, or you could even go to this 21 EMA 145. Target looks really, really good. And so the bar is high. They're going to have to say all the right things. But hey, they're expecting an $11 move on Target. IV on this thing is 71%. So it's by far, so far, the most expensive option that we've looked at. So be careful on Target. We got a high bar. The stock's really up big. So your bar is high, a lot of good expectations. Be careful. Not a low bar there to get over. And then TWO, which I'm not, is that take two? TWO. Last one, Two Harbors. Okay. Don't know anything about this company. Looks like it's an investment company, a financial company, maybe. But massive consolidation with very defined support at 11.98. Okay, that's pretty easy. So it is sitting right at support, no doubt. And resistance, you got a gap right here. Last earnings, it looks like it gapped down. And not last earnings, but right there around the, that's the dividend it paid, 34 cents a share. Okay, so resistance is going to be right there, 12.13, I believe. Around 12.15 maybe. So this stock is just really, really tight. If we had Bollinger Bands up there, that one would say that thing is ready to explode one way or the other. Okay. And I mean, if it gets below 11.98, you can look under it. There's nothing under it. So it's be careful on that. But on the other side of that, if it gets above this 12.15, it's going to do really, really well. Let me look at the news on this real quick. Looks like it says it's in a lawsuit, and that may be dragging it down. It may be a mortgage company here. I'm not sure. But anyway, don't know much about it, but there's your support and resistance, 11.98, 12.15. Okay, I'm going to quit sharing here and go back to our chat. And hello, Neil. Would you swing trade stocks like PSKY? PSKY. Okay. I've been on here an hour and 13 minutes. I don't know how many people's on here. I can't really, let's see, is it 23, 24? Let's go. I'll have to stop. I'll have to share that again. Let's just check it out, man. I'm here. I'm going to check out for you. Okay. PSKY, PSKY, enter. Okay. Paramount, Skydance. Oh, wow. Yeah, they got all this buyout with Warner Brothers, and Netflix was in there. Really defined support and resistance. Easy to do here. You're talking 762, but look up here, 1117. So massive higher highs and higher lows on this. Sir, the problem with it, I'm looking at the RSIs at 70. You see right here? Now, when the stock was down at 762, look at where the RSI was. It was below 30. So this is classic textbook RSI. It broke below the RSI on 721. It came out of it right in here, came out of it, went right back down into it and got below it right here, right there, and got down deeper into the RSI. And what's happened? It came out of the RSI right here at the top, right there. And then boom, look at the blue. That's more buyers than sellers. Red is more sellers than buyers. Would I swing trade? No, not right now. I wouldn't. And but that's just me. The reason I wouldn't is because it's right there at that overbought technical stage. And I don't know much about it, but I'm not saying it's not a good company, not a good investment. Okay, it looks really good. Okay, so if you're high on it and you're like, okay, I think it's going to do well, I wouldn't sell it. I certainly wouldn't do that. The chart looks like it's really trying to come back. But I like to swing trade companies that are on sale. And even though it's under the 1117, technically it's not on sale for me. Okay, so it doesn't meet that metrics of less than 30, but that doesn't mean it's not good for you. Okay, so a lot of stuff happening in this streaming service. And this company, obviously, it's caught a bid the last 2.5, 3 weeks. I mean, it's gone from 762 to 1014. So you're looking at 30% pretty much, maybe 26, 27%. Okay. Anything else that I can think of? No holy grail. Remember the $500 to $5,000. There's no timeline. There's not any stock on my radar tonight that's oversold under the 30 RSI that I'm like, you know what, come Monday, I'm going to buy that. Now, Monday, will I be looking at that? Yes, I will. And certainly I will do a short video and let everybody know the next opportunity. Maybe we'll have a good week on Trade Desk. Who knows? We'll see. But guys, look, I'm going to stop sharing here and go back here. I've enjoyed it. I hope you have a good night, rest of the night, good weekend, and a great week next week. I hope all of this helps. Good night.